Fergus, thanks very much for joining us. I know you've recently released some new research. Just give us, I guess, some of the key takeaways.
Yes, as you say, we've recently released our On the Lookout for Where to Go reports. And in this report, we've identified 3 high return strategies. And really, we're thinking about investors who have already got core investments and they may be looking to supplement these with some additional high return strategies.
And in terms of those high return strategies, I guess what came out of the research?
So, we've identified 3 high return strategies. So the first one is traditional value add and opportunistic investing, which we're quite familiar with. And the second area is areas of dislocation and market stress. So we think that is another potential opportunity for investors. And then finally, the third area is thematic investments, which are supported by mega trends and broader changes in the economy. So things like demographics, the rotation online and ESG factors.
And you mentioned dislocation there, Fergus. I suppose, what are you seeing in terms of the opportunities and the timelines?
I think it's in terms of the COVID-19 pandemic, really, we haven't seen that much distress in the market so far, and we don't think there is going to be large amounts of distress. But that said, there will be some for sellers and sellers who need to raise cash, and we think there are potential opportunities, particularly within the retail sector, where there may be opportunities for repositioning old retail assets which are going to need a change of use.
Looking at the mega trends, what are the key sectors that you're focusing on there?
Some of the sectors we're looking at there in terms of demographics, so senior housing, the whole rotation online, which we've seen across the economy, affecting all parts of the economy. We would see this broadly supporting real estate, which is linked to digital activity, so things like data centers and areas like that. So those areas. And then also in terms of real estate, which is linked to life sciences and pharmaceuticals, which in general over recent years has been a growth area due to advances in medicine. And then, of course, also this year in the development of vaccines to fight the virus.
And does that mean you see this heading towards those more sort of alternative asset classes?
Yes, exactly. I think even looking back to last year, we saw investors looking to alternative and niche sectors, and I think we're seeing that gain speed this year.
And in terms of these opportunities, are there differences in terms of the location, whether that's Europe, Asia, North America?
I think really we're seeing these trends across all markets globally. They're more developed in some markets than others. So, for example, we see opportunities in life sciences in the US, but also European countries as well. And similarly, in terms of multifamily, some markets are more developed than others. So, for example, the US and Japan, and it's an increasingly growing sector in Europe.
And when you're looking at life sciences, data centers, I guess one of the issues around that is the availability of the assets.
Yes, I think, as you say, they're smaller sectors compared to the traditional asset types of office, retail, and industrial, which we know. But we think they are growing, and they will grow in size over time as occupier demand for these types of assets increases and more investment product becomes available.
And there's obviously a lot of focus, Fergus, on ESG and social impact. Are you seeing that in the research coming through in terms of opportunities?
As you say, Rich, we think that's a very important consideration. We do see opportunities in this area. I would highlight affordable housing as one. We're seeing increased effort on the part of governments to improving the housing conditions of their populations. There are opportunities in this area to partner with governments. We think another potential area is cold chain facilities. So those facilities used to transport perishable goods around the economy, and potentially an efficient cold chain can reduce food waste as well. So we do think there are potential opportunities for good investments as well as social impact investing.
Really interesting to see that focus on some of the alternative assets and also on social impact coming to the fore. Thanks very much for joining us, Fergus.
Great. Thanks, Richard.